better or worse, we need to be prepared for a rate hike when the Fed meets next week. The big question now isn't whether they'll tighten, but how much damage that tightening might do to the parts of the economy that are very sensitive to interest rates. I'm talking about housing here. Yet mortgage rates are about to get less attractive. On the other hand, though, the incoming Trump administration is planning to cut taxes and juice the economy, which I think will more than balance out the effect of raising of the rate hikes that I expect. Don't just take it from me, though. Let's talk to an expert, Ellie Mae, ELLI, which provides mortgage origination software via the cloud. And their platform is a major boon for companies that make mortgages. Think the banks, because it streamlines and automates the complicated process of creating a mortgage. Ellie Mae's software is best in class, so the company's got a front row seat to exactly what's happening in the mortgage market. Now, Ellie Mae itself is the kind of turbocharged growth company that's doing pretty well, but since the election, it has sold off dramatically, largely because of the run-up in interest rates, but also fears that banking deregulation will slow its business. So let's take a closer look with Jonathan Corr, the CEO of Ellie Mae, to find out more about how his company's doing and where the mortgage industry is headed. Mr. Corr, welcome to Mad Money.
Hey, Jim, thanks for having me again. Good to talk to you.
Good to talk to you. All right, your business is and has been red hot, but there is a perception that a lot of what you've been able to do is get in the door because there's so much regulation and then be able to do much more. Do you think that President-elect Trump will make it so that entry base, which is deregulation, which is what he's calling for, will hurt Ellie Mae's business?
No, I really don't think so. I think that regulation has definitely been one of the factors that has helped us grow, but a big part of it has been the overall secular shift to automating the origination process. And although there's been lots of talk about, getting rid of Dodd-Frank, repealing it, or dismantling the CFPB, the likelihood is that it's probably going to be some compromise, some level of reducing the power of the CFPB by moving it from a single individual to more of a commission, and some level of greater transparency in terms of some of the enforcement. And I think with those two things, those actually are going to make it really positive all the way around. I think it'll be positive for our customers. I think it will potentially increase credit availability, which, again, is a real win for Ellie Mae and our lenders.
Right, now, you do a survey, and you talk about you really kind of have a great pulse on FICO. You have a great pulse on originations. Where is the country in the last 4 weeks? Because I think there's two countries. There's the pre-election country and the post, and that there is a bit of a surge of optimism to be able to buy everything, including houses, and that is to help Ellie Mae.
Yeah, there is definitely a real optimism out there. I mean, even though rates are going up, they're going up because people are bullish. You've got consumer confidence. You've got the belief that we're going to see some nice inflation increases. We're going to see some stimulation from the new administration. And all of those things are positive for the purchase market. And so when you look at that, you look at the idea of potentially improving credit availability, our customers are pretty bullish, as we are.
So in terms of the trade-off, what I said at the beginning is I think all of what you just mentioned can actually trump, so to speak, any rate hike that even multiple rate hikes to say that we got to mortgage rates to 100 basis points higher, that business could that's not going to impede business if the country's doing better.
It's not. I mean, we're going to see refinance come down a bit more. It has to. Rates are going to go up. People not going to refi for rate. But the fundamental driver of residential finance is people buying homes. And we're in a healthy place right now. Purchases are projected to grow to 1.1 trillion in volume next year, a 10% growth rate. And that's before the stimulus. You get, some stimulus there and interest rates rising. They don't affect people's decision to buy a home. People buy a home because they feel good. They get a new job. They have a life event. They want to move into a bigger place. Those are the drivers. Small interest rate increases don't change that decision process. Perhaps they bring down price appreciation a little bit. Right. But, if all these things play together, we potentially could see an even more robust purchase market.
Yep, what I've been saying to people is demographically, because of millennials and because people have been living at home, it's a multiple-year move. This is not my Bob Toll taught us this, and so did Stuart Miller at Lennar. But do you agree that demographically we're in for a multi-year move?
Demographically, absolutely. You know, this year, about 33% of new home buyers, homes are coming from new home buyers. We're projecting into next year, you know, well above the 50s. 61% of that population is millennials. So they're getting more optimistic. We're seeing it in the heartland. We put out a report today that shows that, you know, in places like Minneapolis and Chicago and Detroit, that number keeps growing. And, you know, I think if we see that positive impetus, we're going to see more of that. One of the things that I saw that came out last month was the new construction starts.
Right.
1.3 million, right? The highest since August 2007. And why is that happening? Well, builders are seeing the same thing that you're talking about, Jim, which is millennials are first-time home buyers. We need more new inventory, and it's happening.
Excellent. Okay, that's Jonathan Corr, President and CEO of Ellie Mae, ELLI. Good to see you, sir. Thank you so much.
Great to see you. Thanks so much, Jim.
All right. Look, deregulation might hurt, but I think the economy getting better, that helps. You got to make up your mind. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.